Very good evening, everybody. As Anna says, my name is Richard Simpson. I'm the Chief Exec at Watkin Jones. I'm going to give you just a few brief overviews as to the business, how we're thinking, what we're thinking about the markets, and then thinking about our growth strategy going forward. So in terms of the investment case, well, very, very simply, Watkin Jones is the UK's market-leading developer and manager of residential for rent. And what that looks like for us, it is a multitude of things, but what that looks like for us is student accommodation and it's build-to-rent residential. Build-to-rent residential could be the umbrella from which lots of other things come in. You have things like co-living, potentially retirement living for rent. You certainly have student accommodation, etc., etc. But as I say, for us at this present time, it's student accommodation and it's build-to-rent. We've been focusing exclusively on student accommodation for the last 20 years, and we'll come back to a few credentials in a second. But it's such a close adjacency to build to rent, it makes perfect sense to now look to move into it meaningfully and really expand our business as we go forward into build to rent, as well as maintaining a really good position within student accommodation. And our business model is actually very, very simple. We are a capital-light business, which is often at odds with real estate, which tends to be capital consumptive. So the way we do that is we forward sell all of our developments. And that's the same for student as it is for build to rent. So what we do is we'll typically go out and secure a piece of land on an option. We'll then work up a planning permission. Both of those activities are relatively capital light. At the point we have a planning consent, then technically we have a commodity. We have access to the land and we have a implementable planning permission. So we can take that to the market and we can sell it, and we do. And we sell it to institutions, UK and overseas global institutions. Have done very successfully for quite a good period of time now. And we forward sell it. And at that point, then the institution's capital flows to us. And that allows us to make good on the land acquisition. It allows us to then build the building and then sort of transfer to them. We also have a property management business called Fresh, and that's been up and running for 10 years. And I think the end-to-end offer there is even more interesting to institutions. We become a bit of a one-stop shop. So at that stage, we can provide all the property management services to stabilise, crystallise the full investment value of the asset, i.e. get the buildings full of very happy consumers and keep that building full. And that's something Fresh has done very successfully, as I say, since 2010 when it was first formed. And at that stage, we have generated typically a 20% gross margin on student accommodation and then a 15% gross margin on build to rent. You'll notice, therefore, that the return on equity or the return on capital employed is high for us because we very rarely put much of our capital into that solution in the first place. So it's relatively unique within real estate, therefore, to be so capital light. We're very cash generative. We don't really have any debt. We do have project finance, but we don't have any sort of corporate borrowings in that sense. And we've got a very well covered dividend, exactly the same here. So we have the same policy. We have a 2 times covered dividend distribution. Because we're not reliant on capital, and assuming there is good headroom within the sectors in which we work, and therefore liquidity from institutional investors to invest, we're not actually sort of restrained from growth by capital, which is unusual. The constraints for us in terms of growth are always going to be how we can resource internally and how we can manage the frictions of securing land and then sort of working through the planning process, which, as we all know and love in the UK, is not a straightforward thing. But nonetheless, it's a barrier to entry. That's why perhaps we can make the sorts of returns we do when we can navigate it successfully. So I wouldn't want that to be fixed overnight necessarily. I don't think any developer necessarily would do. But it's a real area of competitive advantage. It's an area which gives us the ability to leverage going forward over and above others. So that's very much the sort of investment overview for the business. Just to give you a little bit of pedigree, as I've already mentioned, the business has been doing this for 20 years. It's only been IPO'd for its 4th anniversary, but as a private company, it's been doing it very much focusing on student accommodation for the last 20 years. And in that time, it's developed well over 40,000 student accommodation bed spaces throughout the UK. Pretty much every single town and city where there is a prominent UK university, WJ has developed successfully within it. And then you can see that increasingly we've been doing more and more build-to-rent residential over the last few years. And in fact, just a few months ago, we sold a couple of schemes to M&G. One was in South London and the other was on the South Coast. What I thought was interesting was we actually closed the transactions in September. We all know that that was a significant time of uncertainty last year. Generally, who was going to run the country? What flavour would the government be? What was going on with Brexit? I appreciate that question hasn't gone away, but nonetheless, it was very much in the eye of a storm at that time. And in putting those two assets into the market to forward sell them, we saw some really strong institutional demand, which I don't think you would naturally see elsewhere within the UK, and certainly you wouldn't have seen in other aspects of real estate at that time. And I think that's beginning to underpin some of the real liquidity going forward. But nonetheless, you can see here that Fresh today manages 18,000 students and BTR tenants around the UK. And as I've mentioned already, the business has been a relatively large-scale developer of residential for rent over that time. The insight from Fresh is really important because Fresh gives us a consumer dynamic which, as a developer, you wouldn't ordinarily get. So when you've got 18,000 people living with you, they are telling us all the time what they like, which is great, but also what they don't like, which can then feed directly back into the next iteration of how we're thinking about the proposition, the product, the locations, etc., etc. It's a really, really important feedback loop. And actually, it's relatively unique as a developer to have that direct insight. It's like running a focus group for 18,000 people every single day. It's unusual in development, very unusual. So it's a real area of competitive advantage for us. And I think it's even more important where residential for rent is still a relatively new thing, especially build to rent. I guess students are a bit more mature, but BTR is evolving all the time. And so we're getting that feedback coming into our proposition, which I think allows us to potentially stay ahead of the game. And institutions value that. I think that if they see a smart partner who can provide that one-stop shop of services, who they believe are absolutely the market leader in thinking about the proposition and specification for build to rent, then clearly from their risk profiles and their assurance side of things, they're going to look to favour. And I think that's very much what we are seeing. Quite a bold statement what I've just made there. You have to work very, very hard to get it in the first place, even harder to keep it. But nonetheless, we've got some of those kind of assets at our fingertips, which is direct feedback from customers 24/7, and it's important. So quantifying the market, very simply for you, you can pull these apart quite easily, but nonetheless, I think the key thing is residential for rent for us. There's good growth in both student and BTR. When you look at BTR, it's starting from a very, very low base. The amount of BTR units in the UK is 50,000. Savills published a report just a month or so ago. I'm sure, well, you may have had a look at it. They're saying that actually the market at maturity in the UK could be 1.7 million units. So clearly a significant amount of demand. Frankly, if it's 1.7 or half that, it's still a significant amount of as yet unmet demand. So real growth coming through. Within student accommodation, we can see quite comfortably growth of 50% from current student accommodation bed level today. Today there's 620,000 beds. We can see sort of comfortable demand for 900,000. And that's based on two things. The first one is growth of overseas international students. The government, in its immigration white paper last summer, set out a target to grow international students by 30% by 2030. That's another 130,000 students coming to this country. And then equally, UK demographics are about to turn positive next year. It's been actually in a bit of a trough for the last 3 or 4 years. If the propensity for A-level leavers to come to uni stays, which is 50%, then we'll see another 110,000 students on top of that. So potentially another 240,000 students coming into a market which today is 1.8 million. So 15% growth in the sector coming through directly translates into more demand for good quality student accommodation bed spaces across the UK. So this is some of the detail on the student accommodation side. I've covered the headlines of the growth itself. I guess the one point I will make is that not all growth will fall equally across all UK universities. And I think that's where some of the sort of smart insight comes in. There are some universities which undoubtedly are winning, and there are others who are losing. And just to put that in, to give you a sort of clear example of that, the top 20 universities since 2012 have been growing by about 11 or 12% at the expense of the weakest 30 universities that have been shrinking by anything between 8 and 25%. And so the strongest are having the lunch of the weakest. It's because the university sector has been marketised. It's a natural response. I guess you all would have thought that would be a sort of byproduct of that activity. But nonetheless, there's more demand for the strongest universities. And it's those strongest universities, which typically are the more historic ones in the more ancient cities and towns, where there isn't such a great land availability, where perhaps barriers to entry through planning are toughest. That's where it is most needed, but that's also where it's hardest to provide. So it's actually those historic universities that generally have the lowest ratio of existing supply. Now, over the last 20 years, that's where we've been focusing on developing student accommodation. So perhaps we're best placed to continue to meet this growth in demand. In terms of BTR, there's probably a few things. I won't bore you with the housing crisis. You'll be very familiar with it, but nonetheless, there is one. But I think what is more important is the fact that we're seeing more and more people move to rental. For example, since the year 2000, 2.5 million more households created in the rental sector across the UK. In the last 10 years, a doubling of tenants in England. So more and more people are coming to rental. And you might say, well, it's because they can't afford to own. I'm not sure that's entirely true. I think it's partly true. But I think society is changing. The whole idea of consumerism is changing, and it's coming into residential. And in fact, you can see here that 37% of all tenants, of which this was a very large survey, were saying they're doing it through choice because they want flexibility. They want service. It's not a commodity residential. It shouldn't be a commodity. It should be something where there's an amenity and there's a service. It's never happened before within residential in the UK. That is happening. Arguably, it's a form of disruption that is coming into residential, which I think is a really interesting trend, but it's growing relatively fast, and the institutional capital is definitely following it. Of course, institutional capital hasn't really been in residential probably since the 1970s, in truth. There's very good reason for it, but nonetheless, they're looking to come back in. And in fact, UK resi ownership, institutional ownership's only 5% of the entire market. Compare that to the US, which is 40%. So there is this natural underweight exposure for global institutions into UK resi, which is now beginning to be addressed by build-to-rent product from a very low base of 50,000 units, but nonetheless growing demand and institutions following that. So just to try and give you some flavour for institutional volume. So in student accommodation last year, 5.2 billion, and you can see in BTR, about 2.5 billion last year. The reason for putting this here is to show you there is a depth of demand from institutions to access this stock. And I think last year is a really good point to think about, because last year probably was one of the most difficult and uncertain years for the UK for quite some time. And I think what that's showing is really robust demand for this product because of those structural tailwinds, because of the growth characteristics of the sector itself. So how do we feature in terms of competitive landscape? Well, we're the number one developer by volume of student accommodation in the UK. And in BTR, as you probably would expect, this is a more recent sort of part for us. We're currently ranked number 11. Ranking's not everything, and I would expect to see us move smartly up to the left as we continue to deepen our pipeline and really get traction on our sort of development side of things. So what is our pipeline? I think a good characteristic of Watkin Jones is that we're generally forward sold for at least a couple of years. So you've got very good visibility of earnings coming through. And in fact, you can see this here. So for student accommodation, we have just under 7,000 student accommodation beds, and we are almost entirely forward sold for the next 2 years. So it's everything finishing this year and everything finishing next year, forward sold. And then with build to rent, I'm really pleased. We've got 2,300 apartments in our pipeline, and we're forward sold for this year, next year, and already started forward selling for FY22. So again, good visibility for at least 2 years worth of earnings and revenue coming into our business. There's an awful lot of companies out there that will give their hind teeth for that sort of visibility. It gives us the real confidence to understand liquidity. It's mark to market effectively. As we're selling, we're seeing where institutions are pricing. We understand where their demand is. We understand what sort of product they're looking for. That can directly flow into how we're then securing the next wave of land and how we're designing and specifying that as it goes through the planning process. But as you can see, good visibility of our sort of forward pipeline. And then just to sort of catch up with our growth strategy, we hosted a capital markets day in London in one of our recently completed student accommodation schemes which had been sold to the University of London in November. And at that Capital Markets Day, we did a real deep dive into the business. But the upshot of it was that we're confident about growth for all the reasons that I've just covered. And we're looking at growing over the next few years our development pipeline in student up to 3,500 bed spaces per annum. And that's from a run rate of about 2,600, 2,700 beds per annum that we have been doing. So it's good growth in there if we can deliver it. And then within the build to rent, going from a pretty much a standing start, apart from a couple of pilot projects, which went really well. We sold one to AIG in Leeds. There's another one sold to M&G in Reading, which is fantastic. And then the two I mentioned earlier, which we sold in the autumn to M&G. They've all gone really well, so has led us to sort of give real confidence about deepening our pipeline up to 1,000 apartments by financial year 23-24, and then sustaining that level of delivery every year thereafter. Similarly with the student accommodation, 3,500 bed spaces by 23-24, and then continuing that going forward. To give you a rough ready reckon of what a BTR apartment is compared to a student bed. One BTR apartment is broadly 3.5 student beds. So 1,000 BTR units in terms of volume is the same as 3,500 student beds. That's a very simple way to look at the equation of growth, I guess. Clearly there's execution risk in our growth, of course there is, but nonetheless, I think with our track record over the last 20 years in being able to do this, with our model that's capital light, so we're not really reliant on the capital necessarily, apart from looking for institutional partners to work with. And then seeing very close adjacencies with BTR to student accommodation. We actually think we've got the existing supply chain, the development expertise, the sort of planning track record to be able to take our business forward to aim and deliver against these growth targets. Then finally, that really summarises everything that we've been talking about. As I say, sort of relatively agile, market leader in student accommodation development, moving into build to rent. Some really good pilot projects that I think have proven the route. We're quite excited about it. And then meaningful step up in terms of the run rate of our developments, which, if delivered successfully, clearly grows revenue and profitability alongside it. Already mentioned that our dividend policy is 2 times covered, but it's also progressive. So as our growth comes through, you would expect to see clearly good track growth of the dividend alongside that growth too.